Welcome to the Commercial Real Estate Podcast, powered by First National. I'm Adam Pwatek, sitting here with Aaron Cameron in Vancouver for day one of the Vancouver Real Estate Forum. We are doing our speaker video series in partnership with the Real Estate Forum, and we thank them for that. We do have two sponsors for this event. It is ML Emporio Properties and Remax Commercial. We've got a guest on today, is Ryan Berlin, VP Intelligence and Head Economist at Rennie. We have had the chance to speak with him before, but it's been a while. And in these days, a week can make a difference, let alone a couple of years. So there's plenty to talk about. But welcome, Ryan.
Thanks for having me, guys.
So Ryan, before we dive into the depths of the conversation, why don't you just give us a little bit of background, how you end up working at Rennie as their economist?
Yeah, that's a good question. Do we all just fall into real estate? I don't know that it was part of the plan, but no, I am an economist. I've studied for it and didn't actually think I would become an economist, but worked out that way. I've been with Rennie for about 10 years now. So, Rennie is a BC, Vancouver-based company. We're a real estate services company. So we've got a brokerage that operates in both residential and commercial, about 300 agents. And then we operate in the pre-sale space, marketing and selling, pre-construction, multifamily projects and towers. And then we have an advisory practice as well. So my group just supports all of that, supports our brokers and supports our clients and in just making informed decisions. So we're nerds, and I mean that. My whole team it's a bunch of geeks in the best way. We love data. And it's just an interesting time right now trying to figure out, what is actually going on, where we're going.
What data do you accumulate? Where is the sources? What's the...
Yeah, there's a lot of third-party data publicly available. So whether you're talking about government websites or you're talking about, property listing sites, that we have numerous services that we subscribe to where we collect data. And then we also generate a lot of data. We sell a couple thousand homes in pre-sale each year in sort of a typical year. And so there are, millions of data points around each one of those transactions and the people we're working with to understand, why one project worked at a particular time and maybe what the buyers look for, and then using some of that information for the next project, right? So it's kind of like, I think one thing we try to do efficiently to really leverage the data we have is synthesize all that information that comes in from different places. Yeah.
Geography-wise, how wide do you go collecting data?
Yeah, so we're mainly BC focused, like a primary focus on, call it the Lower Mainland, Metro Vancouver, but we've got offices in Kelowna and Victoria, so BC is relevant, and then I don't think before COVID that whatever was happening at the national level seemed to matter a lot to people here. But obviously now we talk about federal policy related to housing or immigration, or we're talking about the role the central bank plays. All of that stuff has a trickle-down effect to what goes on here. So, depending on what it is, the scope can stretch.
So... let's get into the depths of it.
Is the house collapsing on us?
No, yeah, let's be optimistic, guys. Let's stay positive, okay? It's April 2025. We're seeing a very bizarre, for a while now, we've been talking about how there's a housing supply shortage, there's a housing crisis, there's an affordability crisis. We can't build fast enough. The government can't incentivize our private developers fast enough to build more. There's all sorts of, the DCs are too high, takes too long to get permitting, doesn't matter where you are. That's Toronto, but I'm sure that it's similar here. And I know you guys have had some success with, blanket zoning and things like that, but it still just can't build enough. Federal government comes out with, we're 3.1 million homes short just to get to, whatever level of affordability they think is reasonable. And so that would seem to indicate, simple economic supply and demand, not enough supply, too much demand, prices will just continue to go up drastically. Mm-hmm. They're flat or down now across the country, basically in every jurisdiction, and not just slightly down. In many jurisdictions, they're down 10, 15% year over year. The heck's going on?
It's a good question. I wish there was a very straightforward answer to this.
And here's the solution on top of
Yeah,
it.
yeah. I got this, guys. So listen, I think when it comes to housing, you start to hit some financial thresholds, right? Like whether you're talking about rents or you're talking about the ability to purchase and own. And so we can have a lack of supply and not have rising prices because that lack of supply and the constraint it imposes on the demand side of the market doesn't only have prices as its singular outlet to release that or to sort of recalibrate that. And so we see people changing tenures, like a family or a household that might want to purchase and may have purchased 20 years ago, given a different set of conditions in the market. Maybe they're renting. Kids are staying at home longer. We know that. Younger people are doubling up. So we're seeing, and also we have, there's a cultural thing too with multi-generational households. So I think, a lot of when we look forward and we say like we don't have enough housing, a lot of it is based on looking at household formation
history
and patterns and extending those into the future, which I think is very reasonable to do. The difficult thing is, are those patterns changing because of something that's being imposed on us as households, or because there are also just some shifts, like, lifestyle shifts, like with young people, there's definitely a movement towards rental and this experiential life and not owning things and a minimalist lifestyle and all of that stuff. And now, is that the result of everything being so friggin' expensive? Like, is that why that philosophy has become adopted?
Making the best of a bad situation.
Right. Or or is there some independence to that way of living that, maybe we were trending in that direction regardless of those broader sort of conditions? And I can't speak to that, but yeah, so there is that tension there. And of course now we have, we have more inventory in this market in Metro Vancouver than we've really had ever before, whether you're looking at, when you look at resale and pre-sale combined.
For condos.
The condo.
Or the multifamily segment. Yeah, and the reality is single family plays a role in this region. It's not what's driving the overall market. And it's, that single family home becoming increasingly scarce. And I'm not just talking about within the city of Vancouver. As we move into the adjacent municipalities and once you get into the, quote unquote suburbs, we're seeing more multifamily in the form of townhomes, right? Duplexes, that kind of stuff.
Well, Vancouver, we're seeing right now, the waterfront right downtown Vancouver, which has been the poster child for unaffordability in this country for, multiple decades now. Toronto's kind of caught up partway. But do you see a world where people, in scale, raise families in condos in downtown Vancouver, where you rent for life, the kind of the next evolution of living in Canada?
I mean, it's not uncommon in cities that are more mature and more developed than ours. The city of Vancouver already has more than half of its households in all of the city of Vancouver, and not just downtown, in rental. So regionally, 2/3 of households own, closer to 60% rent in the city. So there is that movement, and there are good reasons to rent versus buying. And I don't, for a lot of people, owning a home is an investment, it's part of an investment strategy and a retirement plan. And I don't want to poo-poo that. I mean, it's part of mine. But when you do step back and look at it, it's an expensive asset to maintain. You really got to feed that thing a lot of money to earn a return, right? So I always think like when we don't have obviously, capital gains taxes in Canada on our principal residences. When someone, sells a home at the age of 65 for $2 million and they get to take that free and clear, you kind of look at it and you're jealous, like, it's not fair, no taxes. But it's like, probably for 25 years, that homeowner was nurturing the value of that asset, right? Paying property taxes and maintenance and heating and interest costs. And so a lot went into earning that appreciated value. Of course, housing isn't just, you can't compare a home to a T-bill, right, or a stock. It provides utility beyond what those financial vehicles do, right? It provides housing services. So there's value in and of that on its own. It's I think that there's a world where renting is a better financial strategy, and I'm saying this on as somebody who works at a company who sells homes, which I believe in. Like buying a home is not for everyone. Being renting that where it allows you to access, I don't know, locations in the city, like where we're sitting, for example. Like maybe you can afford to rent here with the views of the North Shore Mountains and Stanley Park. You can't afford to buy. So there is value in that, right? So
where are rental rates right now? Just generally in sort of look to Vancouver core, and you could pick the locations you want to describe.
Yeah, I mean, so there was a couple of years ago we were working with a client who was leasing up a higher end tower downtown on the West End, and at that time, sort of before we got to construction, as sort of we're pro-formaing and estimating what achievable rents might be, and $5 a square foot seemed like you sort of go, imagine we could achieve like on a blended average rate $5 a square foot. But then, as the market evolved and got closer to lease up, we realized like, oh, there is a market for this, and we went past that $5 a foot threshold, which is now standard. I mean, I say standard. You see it in places that aren't in downtown Vancouver in a highly amenitized concrete high rise. You see it in the surrounding municipalities. So there's definitely been pressure on rents. Some of that was driven by high interest rates that created that lock-in effect in 2021 and late 2020 and into 2022. Rents have been pushed, but I think the big thing that we're seeing now is a softening, like a pullback on those rents, both in terms of the monthly rent that tenants are paying and also the per square foot rent.
What about the home value side of the equation for people that maybe do want to pursue that avenue?
So it's a really interesting, it's an interesting tale when you sort of look at how values have evolved over the past few years. In resale, values for all home types, so single family, townhome, condo, everything peaked in the spring of 2022, right? So again, a lot of that was interest rate driven.
Yeah,
right?
Of course.
The values for each of those home types, none of them are back to that previous peak. So we're like 3 years into this quote unquote dip, right? And even for single family, values still aren't back overall to where they were in 2016, 2017. So, we have seen stagnating values. I go back to, and I guess look at downtown and the new home market on a per square foot basis, the ceiling, outside of a few exceptions, but broadly speaking, the ceiling for prices has been around, $1,900 a square foot for the past 7 years. I think, again, we're getting to this point in both rental and in ownership where the pocketbook is being really pressured for households. Like there's only so much you can afford, right? Regardless of supply. And if the supply isn't there, then you go somewhere else. Like you move home, you move in with somebody else, you rent instead of own, or you move to a different city, which, Metro Vancouver has seen consistently over the past 20 years, a net outflow of people to smaller markets in BC, like Kelowna and Victoria. I would say presumably because the cost of living is lower.
Well, it has to be. I can't imagine you see that in Regina or somewhere like that where you can get a home for a price that's not going to break the bank. Those all seem like defensive positions.
Yeah, that's a good way of putting it. I mean, even if you look at the last couple of years, we saw this run up in prices in Vancouver. I mean, we saw it everywhere in Canada, right? It was a function of macroeconomic conditions and forces. But I mean, for the last couple of years, BC has had a net, in our net exchange of migrants with Alberta, an outflow to that province, right? And you look and you go like, well, I mean, for a detached home in this region, we're sort of like looking typical. You're probably talking like 1.8, maybe close to 2. And then you can go to Calgary and you can get something for a third of that value, right? A third of that price. And I think there comes a point where maybe you trade off lifestyles and you say, well, it's not worth it for me to go buy a home in Calgary if values are only half of what they are in Vancouver. But when they're a third, you go,
Wait a minute.
There's a lot I can do with that extra money, right?
Yeah.
Well, I know it's kind of normal here for people to live in an environment where 60% of their income goes towards housing, or even more. But if you get that number more in line with what we consider affordable, it does change and impact your lifestyle. Like it's
absolutely. Yeah, people in Alberta have more toys, right?
Yeah.
So
get some
have a little bit more-
sleds.
exactly.
I seem to be smiling a lot more. I don't know. How do demographics impact this?
Yeah, I mean, so demographics have been a tailwind for the market for a long time, especially recently. I would say most recently, in large part due to the federal government's immigration levels plan and the fact that which increased the targets for permanent resident admissions. So we were welcoming people in droves over the past 4 years. But also what kind of ran amok was the number of temporary residents that came into the country. So we got up over, 1.2 up to 1.7 million visas, work and student visas being issued per year, which was just blew every other year out of the water. And so, that drove up the demand for everything, including housing and particularly rental. Because
the student housing, the foreign student impact on apartment rents, it doesn't get talked about enough, as far as I'm concerned.
Agreed. I mean, they rent, they don't own, and we had millions come in over the past few years. So this is where now we're at sort of this inflection point, and the government said, "Okay, whoa, that was too much, too fast. The stress on the infrastructure, on housing, on transportation, on education, health, all that stuff. It was too much." Too quickly, and so they're unwinding it. So the permanent resident targets have come down. We were supposed to, up until the fall of last year, we were going to bring in 500,000 permanent residents in 2025. That's down to 395 and sort of stepping down over the next couple of years. Still high in a historical context, but lower than where it had been. But they want to see the proportion of temporary residents in Canada's population go from 7.5% to 5% over the next 2 years. So we're talking about moving out, pushing out, not bringing in on a net basis, like 1.5 million people. So I've got this chart that I show, and usually I don't show charts that go back to Confederation. So look, like the last 160 years, but it's
usually.
If only you bought here.
Actually, but it's powerful because in every year since then, Canada has added people on a net basis. And over the next 2 years, so 2025 and 2026, we're projecting a 200,000 person decline in each year.
And that's the first time since Confederation
ever, right? Because we just never have flushed people out like we're planning to in some ways. Our birth rate has been below replacement for 50 years, but we've always had robust migration that compensated for that. So now we have essentially as many deaths as we do births, and we've got negative, we're going to have essentially negative net migration.
I guess the other way to look at that, though, is the million people that came in 2023, if you average it over a 5-year span, you're still probably at a good level, right?
The problem is when all this happens within the confines of like a single investment cycle, it really makes it difficult to make informed decisions on acquisition, on how to position and go to market with, whether it's a for sale project.
Because you don't know what's fundamentals and what's just outside impact, right?
For sure. And I think, we modeled this over the next year, but you look at all of the new rental supply that's coming, record number of units being built. So 10,000 rental units being started each year. We've never seen that before. We have 21,000 in the hopper under construction that will complete over the next couple of years. So this real glut of purpose-built supply. And we have demand softening at the same time. So, our forecast is for a 4.5% decline in per square foot rents in newer buildings this year. When we developed that forecast 5 or 6 months ago, I shared it around the office, not because I was looking for like the visceral reaction, like the pullback to augment the forecast, but I wanted to know, like, does this seem like this is a bit shocking? Because everybody's been as far back as I can remember, it builds into the pro forma like a 3 to 5% escalator in rents. You just kind of do that because you don't know. And our research was telling us like this is going in the other direction. And now, we look at the data through the end of last year and through the first few months of this year, we're already seeing declines that are more than that, right, over the past year. So I suspect that we'll see more softening than our forecast suggests. And that's probably going to last for a couple of years.
I mean, not that the immigration numbers and rents run in perfect tandem, but it'd be interesting to see rent growth over the same time since Confederation. Last time we had a non-rental growth year, even if a small one. Obviously, that does not go back to Confederation, maybe a decade or so, but we've also not had a negative rent growth year in quite a while.
No, that's right. Yeah, and I think part of it's just a recalibration against sort of that backdrop of rapidly rising rents in 2021 and 2022. So we saw them come off and into 2023, and we sort of saw those year-over-year increases slow over the last couple of years, and then and now going negative. And again, I just think it's it's a tolerance thing. Like you talk about I don't think $5 or $6 a square foot means much to a tenant, but if you're talking about a 500 square foot apartment, call it a spacious one bedroom, that's going to rent for $3,000. Like how much money do you need to be earning to be able to reasonably afford that, right?
Where you're not at 60, 70% of your income going to housing or something.
Yeah, exactly. And then and if you're a renter, you may have aspirations to own. So you really need to be able to save money where you can, right? As it's very, very hard if you're renting premium product.
The glut that's I guess in process. What do you envision as the timeline to actually process that through, where all of a sudden you see a market getting constrained again?
That's a good question. So I don't have a precise timeline for you, but it's more than 2 years.
Is that partly just because of the volume of units that are coming on or online that just need to get absorbed
on the rental front?
Yeah, both. Yeah, and I mean including condos, right? Like that's part of the equation.
Yeah. So. For rental, it's a matter of, sort of the demand meeting the supply in a few years. On the for sale side, we are going to see a dearth of new homes in the next few years. We know that because we can look at what's pre-selling or what's not pre-selling more appropriately. And we know then if a building isn't selling, I mean, if a tower that's come to market isn't getting to 60 to 70% by revenue sold within 12 months, and now in BC, potentially, you can go to 18 months if you're 100 units or more. If that's not happening, then that thing's not getting built anytime soon, at least. Right. And so we know that. And we are seeing that even this year, starts are down about 30% year to date versus last year. So, we go through these cycles. You can't build more housing and pull back on housing in perfect tandem with, the way the world is evolving around us. Like if policy says we're not letting more people into the country, or we're actually going to reduce the population, well, that can have an immediate effect. Or if interest rates rise over the course of 3 to 6 to 12 months, housing markets from the construction point of view don't respond very quickly. So you get these sort of like lurches, and you get supply coming in fits and starts, which means that you go through periods where you have not very much housing, and then you go through periods where we are now, which is characterized by a lot of availability, right? So
was the analogy of trying to, a tanker ship changing direction at sea. Just that's real estate. It makes it tough to kind of day trade, bond yields and immigration updates and whatever else influences the market. What other risks are you tracking in the market? I mean, obviously we talked about some of the obvious ones here. Are there any risks in the market that you're tracking that wouldn't be so obvious?
So there is. We've been looking at the completed and unsold inventory in the for sale market, obviously, the new home market. So these are situations where let's say a tower was built, so they hit their pre-sale target, so to speak, got enough committed buyers to trigger their construction financing. We're able to build the tower and sell along the way, right? But by the time it completes, there's some number of homes that still haven't sold. And so that number has been rising. And
were those not sold? I mean, for the longest time, developers like to do that because the idea was hold on to sell it so you get more per square foot. Would these be product that was marketed the entire time and never sold, or do you think held back for better days?
No, most of it, you're right. I mean, when the market is humming and prices are rising, yeah, you'll see developers obviously hold stuff back and release it on a schedule to maximize the per square foot revenue. That's not really what we're seeing right now. We're seeing 2,200 units regionally that are finished, empty homes, never been lived in. That's the highest number we've ever seen. And developers want to get out from underneath that inventory, right? It's capital that's tied up there that they could redeploy in other places. And the issue then is when you're talking about completed product, you've got owners who maybe bought, 4 years ago, pre-sale, maybe at $800 a square foot. I'm just making up numbers. And by the time it completes and they take possession, let's say the market's at 1,200. Well, if they didn't really intend to be a long-term owner of that, or they want to redeploy capital or whatever it is, they're looking to sell, and they might go, man, even if I sell it, $1,100 a square foot, I'm making like a 40% lift, right? So that works for me, whatever it takes to move it. And so then you get into this like price competition with, sales of units that were pre-sold and that existing unsold inventory. And that has the effect of sort of, I wouldn't say depressing prices, but it does limit the upside to them for sure. And so over the course of this year, when we look at completing projects, we're expecting, and we look at absorption patterns, we're expecting a 60% increase in that unsold inventory, completed and unsold inventory. So that really needs to be cleared out over the next 2 to 3 years before we can get some real momentum behind the
and so to think that through, what has to happen, you've got to have buyers have enough cash, enough income, enough worth to afford those condos, which likely means those condo prices have to come down.
While competing with sale units that were sold as part of the construction financing.
No, of course. So, and then as those condo prices come down, any new projects are going to be marked against those new condo prices, which ultimately means land values have to come down to reciprocate.
Right. But they won't really.
Well, that's the thing, right? This is the quagmire, right?
Yeah. They don't really flex. So I think that is going to be one of the defining sort of issues. And Adam, you asked about what are some of the risks we're looking at. That is, I don't know if it's a risk, but it's definitely a feature of the market that I think is going to sort of dictate the pace of the recovery once it starts.
Well, I mean, as you kind of alluded to, it does hamstring developers too. If all of a sudden they're holding very expensive, units are expensive, especially if you're getting into multiples of them. There's equity sitting there that's not being put into the next project, where even if maybe the market said you could do it, and they have this outstanding risk, this unsold inventory, and there's no real clear exit path for it. That's a tough one.
Yep.
I mean, as a lender, of course, there's inventory loans, but we won't get into those today.
Yeah, but if there's no buyers, I'm not sure we really want to be in that business anyway.
Yeah. So. And I think that's where, we talk about, where's the pre-sale market going? I always say, the question you need to ask before that is, where's the resale market now, and where's the resale market going? And before you can really answer that, you have to say, hey, what's happening in, not to get too pedantic, but what's happening in the labor market? Are they confident? Are there enough people working? Is the unemployment rate at a reasonable level? Is the employment rate at a reasonable level? Are people's wages increasing consistently? Do they feel confident that they'll have a job in 6 months, 12 months, 5 years? Those are preconditions for a well-functioning resale market. Then we get into resale and we say, okay, what needs to happen there for the pre-sale market to get activated? And quite honestly, you need some tension in the resale market. Where does the average person get their information on housing? It's not pre-sale. Nobody knows anything about the pre-sale market. There's no real public single source of information on that. So it's the resale market that dictates perspectives. We get the data every month published in all the papers and websites and yada, yada, yada. You get a few months of price increases in resale, and the mindset of all of us kind of changes. You go okay, real estate goes up over time, right? Real estate goes up over time. So you're more willing to part with a 10, 15, 20% deposit on a pre-sale home that's going to be held for 4 years, because you think, over that time, the value of that asset is going to go up. So, and I can leverage that in the short term. I can potentially assign, sell it in the short term, and so you're just way more willing to participate.
Way more confident. It's confidence.
But going the other way, if prices are stagnant or declining, the value proposition of pre-sale is not nearly as strong. You look at a developer and say, like, why would I give you my money now? Why don't you build it? And then I'll let you know in 4 years if I want to buy it, right? So,
was that another risk of the market? I mean, Toronto right now is a bit of a bloodbath in terms of people that try to do the pre-con flipping, never intending on closing, and now of course will be forced to close.
Yeah, the assignment market is. I mean, there's a back box. Like nobody can see into that. But
and Vancouver attracts a lot of investors on that level. With these buildings completing in the next year or two, they will include, of course, unsold inventory for the developer. Is there also people will have assignment strategies going sideways on them?
Yeah, I think so. I mean, I've always said with pre-sale, like you should never buy with the need to assign. Like you have to be able to close on that. Otherwise, you just lose control of the process, right? You're at the mercy of the market, and you can get into a real sticky situation. So, I mean, we are seeing that with closings. That there are assignments in the sense of bringing other people onto title, like into the contract with assets or more
like
income.
friends and family, or like
family,
a third party.
Family.
Okay.
Yep, exactly. So, yeah, we are seeing that a little bit because I think another thing not everyone does is sort of go for that rate hold over that pre-completion period, whether it's 2, 3, 4 years. Like understand what you could actually when you take possession of that home, what does it look like financially for you, and are you going to be able to do it? Because I think a lot of people just think like, well, heck, 4 years from now I'll be making more money, interest rates will be lower, and it's fine. I don't need to think about it. But that context shifted in the last few years.
Maybe before we sign off here, what's a parting positive thought about the next couple of years in this market?
So yeah, I know I was giving a presentation this morning, not here at the forum, and I felt like such a Debbie Downer. I always say, as an economist, it's not my job to make people feel good. I also don't want people to feel badly necessarily, but it's more about like what are we seeing, and there are a lot of headwinds right now. There's a lot buffeting this market that's making it challenging to see where the value is. I believe so strongly when we talk about Canada and British Columbia and Metro Vancouver as a market, as a stable geopolitical and economic environment, broadly speaking, especially in relation to other countries, and now increasingly so against what's happening south of the border. And I look at this region as a place that people actually want to live in, whether they are already in Canada or they're going to come here. That gives me a lot of confidence that the market will be there. I mean, it goes through ups and downs over 2 to 5 year periods, but long term, I'm very bullish.
It's a beautiful place. They're not making any more land. There's a lot of fundamental attributes to the VC market that you can't ignore.
It's tough to make a mountain.
Yeah, exactly. Yeah. Thanks very much for coming on. Really appreciate the insights and the time. That was great. I'd like to thank First National for powering the podcast, the Real Estate Forums for hosting us here as part of the speaker video series, and the sponsors, ML Emporio Properties Limited, Remax Commercial. Thanks again.
Thanks, guys.